Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording here on Friday afternoon, about 40 minutes before the close on January 24th. 1 week left in the month of January 2025. I know that's hard to believe, but it's actually true. On today's show, we're going to talk about the Trump effect.
Mhm.
What are the charts saying? What are the markets saying is the Trump effect? And I think you may be surprised by what conclusions we come up with this week. My name's Ben Maldonado, and as always, I'm here with my partner Barrie Hederachi. Barrie, how we doing?
Doing good, doing good. Considering 2 days out of the week, we didn't, they had to cut power because of high winds up here
I
in
know
California.
it's
So
crazy,
other than
absolutely
that, yeah,
crazy.
great. So, mhm,
It's hard to believe that California, they're cutting power just like it's the third world. Unbelievable. Every day.
mhm, mhm. Every
Unbelievable.
other day this week. Yeah.
Yeah, yeah. But anyway, let's dive in. Let's start with the S&P. I think the most curious thing is different charts are saying different things about what the Trump effect is. There's no sort of one theme we could say. Is that accurate in your opinion?
Yeah, I think that's accurate. And it's usually that's how it is. It's rare that when everybody lines up exactly.
Hmm.
But I think there are enough clues. So let's take it from the top and
Let's go.
see what we end up with. So here's the S&P cash, that 50% line, 70, 61.17. The dotted line is around 61.13 or so. And we
I
used
mean, the
that
half
number
square was
earlier.
perfect though. Look at
Yeah,
that.
half square is 61.17. Yeah, it's pretty good. I mean, earlier, early December when we ran up to it, along with all the other squares, we didn't quite meet the target. We were just under it. But sure enough,
Hmm.
we got about what, 4 or 5 weeks of downside coming off of that. And and then we whipped around and what did we have, 9 days up and stalled out exactly at the 50% line. And the key thing here is the 50% line and the fact that we have a potential false break.
Yeah, there's a false break set up there.
Hmm. And I think the reason we have to be alert, I mean, obviously, any time there's a false break potential, we're always watching that because a lot of good trades set up coming off these false breaks, just like this, what happened, late October, November here, the false break here before we went traded up, and also the false break at the high. So I think these things are patterns that we have to watch. So far as that goes, we potentially have a false break, but obviously we need to trade lower, at least take out Thursday's low to
Hmm.
sort of confirm it, right? We want to take out I mean, Friday's low would be fine, but because the way the pattern looks, Friday, take it out the Friday low, lower the high bar would be okay, but take it out Thursday's low at what is it, 60.74 and
Hmm.
67 cents. That would be ideal, right? That would really kind of
Hmm.
confirm it. So we're going to be watching for that next week. Mainly because we were still under the 50% of the square and didn't quite clear. We can make a case for saying, well, we got above the old high. Sure, we did that. So physical support we have, structural support we have, but we really didn't get a chance to get on top of the 50% and hold above. So this is a case of where we, bounced against the 50%. Well, and sellers stepped up.
It also looks like Barry, like we did a 45 high to high.
Yes, we did. Yep. We did exactly 45 high to high. That's another thing, it's a good measured move
Hmm.
and probably why we really stalled. So
Right.
not much more to add to that because it's a level we're watching. We worked off this level. So that's what we're watching on the cash.
Like most things, Barry, and everything we do in our work, we're at an important level. Now it's price action that dictates what's going to be more probable.
Absolutely. And we're looking at the patterns and, it's all sort of adding up, filling in the pieces.
Hmm.
Here is the continuous chart for the futures, and you can see we're still kind of dancing around the 6100 level and still well below the ABCD, but it's in the neighborhood, like we didn't clear it and we're not like tearing off of that level,
No.
nor are we selling off of that level. So we're in the same kind of neighborhood. So we have to watch that.
Hmm.
Here's the March contract. And, I drew out this little expanding triangle a while back, and it's possible we go up and top the 135. That would really give us this fourth wave-ish kind of a thing that we've been watching.
Hmm.
And so far the flavor is like that. It's not a, you know, uh, any other kind of a larger pattern. If you take the pattern for November, what would you call that other than a kind of a fourth wave-ish kind of a sideways expansive pattern, right?
Agreed.
Or even can call it distribution if you dare to. So it could be, it looks
Could
like a
be.
distribution pattern.
Could be.
Um, so let's move on to the Dow. And again, we're at the 50% level, which is 44,884. And well, we're just under it and we turned down. Not quite the false break that we had in the
No,
cash S&P. Mm-hmm.
but a lower high.
Yes, exactly. We have a lower high.
Hmm.
And this is about as close as we can get and then turn because we have that really clean sort of structural resistance right above it. And look how
Hmm.
perfectly we came up to it yesterday.
Yep.
And today we're kind of very narrow and we're just under it. Okay, so where does that leave us with the Dow? Well, either we're going to just take out today's high and take out all these highs and settle above and start trading above, or we're going to start trading lower. I suppose we should look for a correction off of this one leg.
Hmm.
And what the question is, what kind of a correction can we expect? Obviously, getting below 44,300 will set us up for at least 43,723. This is the lower part of this range here.
Hmm.
Anywhere in the range, I would say, is very positive, in the sense that, we might not still be done, but taking out the lower part, 43,723, I would say we can start confirming the lower highs then at that point. And I'm talking about this because you can see, I remember on the way back down the counter trend stalled exactly at that level before we had that final leg down.
That's correct.
So it does have a history and the level seems good. And this pump kind of went right through everything. So let's see what the pullback. Pullback's really what tells the story, not the pump, right? So yeah, that's kind of what I have for the Dow. Lower
Hmm.
high and a couple of levels to watch. Anything you want to add to that?
No, the Dow and the NQ are both lower highs, which we'll show the NQ when you flip it over to me.
And here we have a potential false break, mainly
Yeah.
because we didn't. Let's say we messed around all morning and then into the close we traded higher. We didn't do that. We popped up because of all the overnight. A lot of overnight trading this week. Globex, and
Hmm.
then we just started selling off most of the day. So let's watch that. So cash wise, 60-20 obviously is a level. If we can come down to 60-20 and hold and bounce off of it and take out the 61-17 to the upside, I would say, there's a whole nother bull leg in the works. And that would get us to the 360 that I've been talking about. That's up near 6,500. Now, stopping at 60-20, taking this out, that would set up a kind of ABCD, but that's one way to take off. But it wouldn't be that simple right now because we have all these other things. We can't forget the cycles that came in at the December high. And, the thing is, it's funny after 30 days or so, a month or two, you forget all about, what happened here last time we were up here. All we remember is the euphoria sort of in the last leg, right? We tend to forget the sort of the bigger picture. And speaking of the bigger picture, here's the weekly cash. Well,
Hmm.
no, weekly futures chart. And here we have the 6,166, 50% of the square. And we also have an ABCD. I mean, this, I don't know, it's about as double topish as it gets. Keith,
Yes.
I mean, and it's funny how it just ends up exactly where the square was in December.
Hmm.
And so we wait. I mean, to me, this is a counter trend high until we settle above 61, 66. And it's not hard to figure it out because, high came in exactly on the square, right here. You guys missed it. And, a couple of weeks, 2 weeks later, we're back in the same spot. So what do we talk about here? Well, we talk about the fact that we did correct. Um, and now we're back up at the high. And when do we not stop treating it as a counter trend high? Well, when we take it out, we take out the level 61.66, which we haven't done yet. This is basically the weekly chart, right? And if you look at the cash, well, that's one cash chart. Well, this is the square of the low that I was working with.
Mm-hmm.
And again, we're still stuck in the same place. Nothing much happened. But let me go to another chart that we have. This is the cash weekly chart that we've been watching. A big story around this. We had the ABCD, and we had this entire circle chart that was working pretty well going up into the high, and even had a little bit of a zone, up here, trying to catch this, wherever this leg ended, and it ended pretty much on the level as far as price goes. And if you guys look at this line that we watch every couple of weeks or so, this is it's an important line, geometric line, and you can see how we held it at the first high. We
Mm-hmm.
corrected. Now we're back up right under it, and this wasn't a. This is more like a kiss from below, being that we never were above it,
Mm-hmm.
earlier. Anyway, so we have that. Yeah, that's pretty much it. I guess the circle is pretty much a goner at this point. It would have been great if it worked, if it held, and the circle had the traction here. But it looks like the square and the time is fully in control. The correction came exactly back to the 144. We talked about how long it's the weekly is about the 144. We have to kind of pause and wait for it to for the finish up. And a bigger leg down would only start if the 144 failed, and which it hasn't. Got close. Took a little peak below it, but then whipped around, and now we have a bit of a high on top of it. So that's kind of what I have for the weekly. What's all that talk about? Well, it's about the fact that we might be near highs, but it's structurally, square wise and geometry wise, we're kind of in the same place. We really didn't do much. We didn't break out above these levels. We're still kind of scrounging around below. I guess that's the point. Coming off of some kind of a counter trend, meaning here the sell off we had is okay. We've done it before, but at one point this is going to fail. This kind of a thing can't continue to go, especially when you get past certain numbers. So now clearly we can get to 144, we can get to other numbers, 135. So those are in the works. But for now, we have to go with the square that did come in, and we want to see if which way the pattern can break. And so far, it didn't break to the upside. And we know the levels from the daily chart, where that upside break would have to come from, and what levels would have to be taken out to get established to the upside. So far, we haven't done that. So I guess that's the other second point. That makes
You
sense?
know, the thought that comes to mind is that,
Hmm.
the high with the cycles that came in December was a good high,
Hmm.
but the powers that be with deep pockets didn't sell enough, and they're bringing it back up to see if they could sell some more.
Well, that could be. That's another scenario that could be playing out,
Right. Unless, obviously, unless we get above, that 61, 66, then you say, okay, the next bull leg is on.
Hmm. Hmm.
But if we get stuck below, then that could be your, post hoc explanation.
Yeah, sure. And here's the 30-minute for this week. I didn't get a chance to post this week, so I guess I'll start next week. Although I
Mhm.
might be traveling towards the end of next week, so I don't know. January is going to be one of those
One of those months.
months filled with movement. So anyway, look, the 30-minute is interesting. 61.25 is 144 degrees up from the low on the 13th. So, I think my morning post today, I said, if we can hold above that, we're okay. That support and we have a pretty big range to move between 61.25 and 61.70, which is 180 degrees up from the low on the 13th. So that's how I'm framing this thing. And you talk about muddy waters and not making it clear. Well, look at that. We don't quite get to the target, but we come down here and hold exactly at the 144 level. So for next week, it's very easy. This is the basis, the 30-minute. Watch 61.25. That's going to be the key level to watch.
It's testing it
And
right now as we speak.
man, we've been testing it for the last couple of hours, right? So
Yeah,
if
yep.
we somehow slip under, retest fails, then I think we really have to be on our toes because we have a potential false break working. So putting two and two together, you really have to watch this, if not for any other reason, for that reason. And to the upside, sure enough, if we hold 61.25 and manage to get up into the 7/8, above 7/8 of the square, which happens to be around 61.47, and we take out 61.70, sure, if we can settle above that, we have a whole other
Whole
golden
nother
age for this
leg.
golden age starting for this leg.
All right, right.
So let's see how that plays out. For now, those are the indications. So we want to watch those very closely. I mean, we're not here, I don't think traders are here to be just forecasting. We're here to be trading. So those are the numbers and the kind of the sort of the patterns you want to watch. We talked about the 60-20 basis the daily on the cash chart, 61.17. That's sort of the bracket. And you guys saw the 30-minute. So I think we're good. Anything you want to add, or do I need to cover
Now,
anything
just
else
that
on along the?
depending on which market you look at, it's a
Mhm.
little different picture. So there's a lot of muddiness or cloudiness that we have to get cleared up by price action.
Yeah, and the December highs, those cycled out on a lot of all the markets, all the indices.
Hmm
So
hmm
that's still in place. Like I said, until the high gets taken out, you can't really call anything else. And that's what we have to do. So we haven't really taken anything out. Just dipping a little bit above like we did here is not exactly what you call getting taken out, especially when we have 50% of a square, right, sitting right on top of it.
Yeah, right
If
there.
there was nothing else above, okay, fine. We can at least give it a little bit of leeway. But here, we have a 50% of the square, plus we have a bit of a false break pattern. And so anyway, those are things to watch for next week. And
Good.
if you guys like our work, please remember to like and subscribe and hit the alerts. And if you want to follow what we post daily, our links to our X accounts are in the description. Pick it up there. Let's move on to, and you're going to cover the NASDAQ, so I'm not
Yep.
covering it here.
hmm
Let's take a look at the bonds, skip through these. Not a whole lot happened. Bonds, we talked about a bounce because of the square or the low that came in. I think there was a square in here somewhere.
And that's decent timing right there.
Yeah, 90 came in high to high.
Mm-hmm.
But yeah, the 67 came in right in there. I think there's enough. Oh yeah, there's 120 by 67. So
hmm
120 calendar days from high to low. So we have to respect that. So I'm guessing we get some kind of a bounce. I mean, we talked about it last time and the time before, as soon as we hit the price here. And so we did bounce, and we talked about having all this overhead. We really didn't clear that. We kind of stalled out exactly in the middle of all of that. If I were to sort of bracket that, see, we're in the middle of all of that now.
hmm
Obviously, I think after this, whatever correction the bonds have to make, the downside is what we want to do. Want to really trade to the upside. I mean, getting back up to 116 and a half, 116, that area is the resistance, not just square wise, but also structurally. We have all this sitting on top. But first, let's see if we can clear that up. We have FOMC next week, right? 29th next week.
hmm
Yeah. Yeah.
Tuesday,
Next.
Wednesday. Yep.
Yeah. Yep. Tuesday, Wednesday. So a lot of things could be happening. So watch the bonds. Now you guys kind of know what the brackets are, the levels are, and where we could go. Obviously, if we take out the low we had in earlier in the month, then I'd expect much lower prices. And like we talk about every week, expect to get this have this low being taken out. So yeah, so that's that.
Hmm.
Let's take a quick look at the weekly bonds. Weekly bonds pretty much came to our target. 114 is the resistance, the big time resistance. So we didn't really get above it. Obviously, we tapped it and sold off. And that might all be there to it. There is to it. And it's funny because, we have a high bar, corrective high bar, and next week, and which stopped at resistance. And next week we have FOMC. So if this week's low gets taken out, we could run. So keep an eye out for that. Wouldn't you say?
Agreed. Yep.
Yeah. All right. Crude. Last Friday, we talked about 79.50 being resistance and that we were looking for some kind of a correction down into the 73.50 area. And, more or less we got that. We almost
Yep.
touched it and good enough. So I think we're range bound for now, 73.50 to 79.50. Obviously, if 73.50 gets taken out, then we're probably going to go, down to midways between the next range, right into 69 area to find the next level of support before 64.75 and ultimately 61.61. I'm still
Hmm.
not taking this off the board because you never know. We need a good clean out before we really run. So
Agreed.
that's still a possibility. So we'll see. But hey, long as we're above 73.50, like we talked about last time, this thing is primed. So keep an eye on things.
Otherwise, just
Um,
trade the range for now.
yeah, yeah. But long as above, while you're doing that, long as it's above 73.50, just remember it could run. It could run on
Ab-
very short notice.
Absolutely.
Hmm. And pretty much the same story with the weekly. I mean, we had an initial leg up. So now the structural support is right around 71, 72. And obviously we can stop above 73.50 is very, very bullish. We'll see how
Hmm.
that goes next week with all this FOMC and everybody else. It'll be interesting to watch how all this pans out. But these levels never lie, so they're reliable. We can watch them and trade them. Moving on to gold, we saw the triangle breakout last week. We talked about how the breakout and a test of the breakout line, and then that we could go up and test the highs again, which we did. We're testing it now. And like I said, if I think last week we talked about long as we are above 27.10, gold's pretty good place. And the next, I mean, we're at resistance now because of the square. We're 240 degrees up from the October low. If we can get above and hold above 27.88, then we can settle above here somehow, then I think we can expect higher prices. For now, we did make a run up and it's probably going to settle and maybe correct a little bit. I think correcting or consolidating here would be out of the ordinary.
A lot like ES, it's pretty much a double top.
Yeah, yeah, pretty much exactly.
Hmm.
Crude we talked about earlier. Well, here's the other crude chart. You can see we broke out of the weekly downtrend line and now we came back to test the breakout line, right? So
Hmm.
it's going to be really interesting how this all works out. So we're watching it closely and we'll keep you posted. Anyway, getting back to the gold weekly chart. Well, it's pretty much like the ES. We came right back
Hmm.
up into resistance. We had 27.97 was the level, and the shaded area was sort of the target for this leg up. 144 degrees up from the 22 low. And till we can really settle above the square, and the square level here is 27.70. Till we
Hmm.
get really settle above that. We may be closed above it today, but till we can really get above and hold above, I'm not really expecting a whole nother leg. So it's possible that we correct a little bit before we move higher. So
Hmm.
let's watch that. It's right on the level, so not much to talk about
Okay.
when everything's at squares. So silver, pretty much the same story. We talked about the low squaring out and that low probably being in place. And silver, sure, it didn't rally, but didn't exactly dive either. So we're kind of consolidating at a higher level, making higher lows. So I think that's positive. Next, we have copper. Copper is doing pretty good, I think, considering everything that's going on. We came off of the square level at 60, which is about 50% of the square, and managing to hold above, long as we can hold above these levels, let's say 423, copper's okay. And it is, as of today, we did make a higher low,
Hmm.
and we did make a higher high earlier. So it looks like the low could be in place, knowing copper, it's either in place or we're consolidating, but at least we didn't drop down, earlier when we came down to test the level. We just did a
Right.
sort of a false break and moved higher, which is good. It's positive. So
Hmm.
looking at the copper weekly, what happened this week was we were able to test the 144-degree level and managed to hold the entire bar for the week above that level.
That's
So
big.
that's,
Yeah.
yeah, that's big. It's subtle, but it's big. Um, so let's see. So next week, if we take out the lows, well, we can expect much lower copper prices. But if we can manage to hold above that, it's a little bit like crude. I would expect it to behave in sort of a primed state, right? Where it could run
Hmm.
on short notice. So that's how I
Hmm.
would watch that. All right. Then we have the dollar. Dollar ran up. We had a couple of levels. Our next resistance level on the square of 60 was 110 and a half almost. Didn't quite get there. But you can see we were a little bit above 60, but not quite to 90. So then you have to go, hey, what's between 60 and 90, right? And
72.
yep, it's 72. And if you guys want to see, 60 is still important. I think I mean, we're watching that, and you can see how dollar behaved along that line. I mean, holding it
Hmm.
really well up until today. But if you look at the 72, you can see we're more or less squared out. Then we
Yep.
ran up a little bit in reverse. So that looks like a little false breaky kind of a look.
Hmm.
Either way, we're watching that. That's a 72. But I think, dollar kind of runs on a 60. So, which really is kind of a 90. But the key thing here is, 107.25. We talked about this last week and a couple of weeks earlier. I talked about how even if we correct down to 107 and a quarter, and if you can hold above that, that dollar's in good shape. So let's see
The
if we
low
can do
today
that.
was right there.
Yeah, yeah. So not much to add to that, other than the fact that we came right to it, and also that 107.25. It's not coming off this structural support, but it just happens to be right there.
Hmm.
And so the number is still valid. Let's see what happens next week. Obviously, if we reverse on this, take out today's high out, we're back in the game on the long side. Otherwise, it looks like a kind of a normal correction. You can see this correction we had earlier. This looks a little bit longer than that, but it's okay. It's within the boundaries, right?
Yes.
And yeah, so we're watching it from about 107 and a quarter, and yeah, that's pretty much it. Let's quickly look at a weekly dollar. So weekly dollar, we have these other lines are square nine lines, so kind of ignore that for now. But you can
Hmm.
see we do have a couple of hits up here, so we're 90 degrees up, so that's a resistance for sure, and wouldn't be unusual for it to back off. So I think as long as we're above this 106 level, dollar's in really good shape. Above 106 and three quarters, dollar strong. And after that kind of a run, I think, having a couple of weeks of a pullback seems normal. So I think we'll
Hmm.
stay with that, and we'll pick it up on the other side, see how it goes. Now let's move on to the euro.
I see the euro recaptured that 90 there. That's important.
Yeah, we recaptured that. And what's interesting is it went, what, like a 90 and a quarter into the next
Hmm.
square from the
Hmm.
high. And if you take from the low, which we've been tracking, sometimes we track off the low, we're exactly 3/4 of the square. It's another
Mm-hmm.
quarter level, and here's a 90, right?
Sure, sure.
We just sort of got above that. So obviously that low is a really important level because it shows up on both sides,
Mm-hmm.
and it's no wonder, we kind of bounced off of it. So the next big time resistance is 106 area. No question about it, because that's, some of the overhead from the run before. And that's where we tapped before we sold off on this last leg. So that's there. And, when we start running these 3/4 or quarter squares, sometimes it's good to go back and check what we have. And here we have 108 degrees down on the square 72.
Mm-hmm.
And that looks like we're running up into, and this square has been running pretty well, running up to about 105.7, which, we're just a little bit shy of 106 that we talked about earlier. And that's kind of the same zone that we have marked here, marked back in April, May, or April. So I'll go ahead and mark that off just so we have that in place.
Mm-hmm.
That would be ideal place for resistance, mainly because of the squares. And we'll see how that works out. Yeah, the 90 is important. So now you can see that quarter level is pretty much at that 72, the
Mm-hmm.
one, right? So
Mm-hmm.
it's all kind of fits together nicely. And if we stall here, we'll see. I mean, that would be a great place to sell. And being that we have a little bit more room to run, it looks like the dollar might have a little bit more room to correct, which we talked about earlier. So, everything lines up.
Sure.
Nothing out of the ordinary. Let's move on to, yeah, dollar, say we can 106 3/4, and over here we have 106 1/4, so you got plenty of room. Looking at the weekly euro, we have some timing, and we got above the 50% of the square, which is always a good sign, a little bit of strength.
Mm-hmm.
So I think
Mm-hmm.
we're on to some kind of a temporary strengthening, or I would say just a normal correction, since we really haven't had a decent, when I mean decent, more than a 1 bar pullback on the way down. So the euro was really, really weak. And so far it's just been 1 bar. So let's see if we can carry on to 2 bars or tap that resistance that we saw on the daily. I mean, that would be like the ideal place to wrap all this up. And yeah, so I think that's what I have for the euro. Anything,
Okay.
anything you want to add?
Nope. I think
Euro or
that's
the
good.
dollar? Okay.
The dollar's been so strong, a bounce in the euro and a correction in the dollar is not out of the question.
Yeah, seems normal, right?
Mm-hmm.
Like, these are things that to expect. All right, moving on to the Hang Seng.
Keeps
Yeah,
winding up, doesn't it?
keep winding up. We talked about this low being a false break, and holding above this level would be positive. Sure, it didn't catch on fire this week, but it definitely, at least it maintained above this 19,450, consolidated nicely. And like we talked about last week, there is a range between this 450 and this 20,380. And once we break to the upside, I think we can expect more bullish action and pick up in momentum, and that's kind of what we're expecting to the upside. I'm guessing we're going to hold the lows. So if we break to the downside, then we know what to expect there. But for now, it's behaving very well according to what we're thinking, especially since we did 72 bar correction, right? So it's in
Mm-hmm.
pretty good shape. So that's the Hang Seng, and you're going to cover natural gas a
Yep.
little bit.
Mm-hmm.
Okay, all right. Still looking good.
Yep.
The contract change, but looking good. So we have that. Well, that's pretty much what I have to share.
Okay.
All right, let me put it back to you, and we'll pick it up from there. Okay.
Excellent.
All right. Your 22,000 level,
Yep. Pretty good, huh?
3 days in a row. I mean, that's not exactly bullish, man. You get the lower low, lower high there.
Well, yeah, the key thing is, unlike the S&P that would have come up and went up in here and like double
Hmm.
topped, or
Hmm.
or actually the cash made a higher high
Yep.
on the S&P. The futures were, like a double top. This we're
Mm-hmm.
significantly below, and so far we got stuck below the 22,000 at the half square.
For 3 days.
3 days.
Mm-hmm.
Last 2 days have been inside bars, so we'll still have to see. Taking out the low from looks like Wednesday would be the key one. And that's
Mm-hmm.
what's that low? That's 21,768.
Yep.
If we take that out, then we've got the reversal. We got this high, and this, this could. I mean, even if it just does an A, B, C, D, you still got a decent move.
Mm-hmm. Yeah.
Down to here, which is about what, 20,000? Yeah, right around 20,000. And we
Yeah.
know, getting stuck under there definitely makes 21.3 in play,
Mm-hmm.
21,300's in play. And if we
Mm-hmm.
lose that, then we keep stair stepping down. So this is not exactly bullish. NQ is not exactly bullish. Let's check out the weekly. Weekly, we had an up bar this week. We did
Mm-hmm.
have a lower high. So next week, we want to see if the low gets taken out and we reverse. And the low this week is 21,377.
Mm-hmm.
If we take that low out and get a reversal, then the next key level is this 21,000. Getting a full bar under here will be something we haven't done, even in this correction, and that'll set the tone for opening up like 18,000.
Mm-hmm.
So we want to watch to see if the low of this week gets taken out, and then watch 21,000 weekly basis.
Mm-hmm.
Here's your monthly. Again, 21,000 is key. So next week, if we should close below 21,000, that would be important because that would be a monthly close below.
Mm-hmm.
You see, even in last month with the weakness, we still close, right on the line, just a little bit above it.
Right. Right.
So next Friday's close is going to be important because it's also the monthly close.
Mm-hmm.
Let's check back in on the calendar day. Look at that.
Wow. Right on the line.
That's what you want to see from a counter trend, right? You want to see it come up,
Absolutely.
get stuck under, and then reverse.
Mm-hmm. Mm-hmm.
So this calendar day chart, and this is using a 90 square. That's that 360 line that we're getting stuck under. And it's
Mm-hmm.
getting stuck under it for the second time, right? Here was the first time. We
Right.
tested it, came down, come back and retest, fail again
Mm-hmm.
if we reverse. So NQs are not looking bullish. Let's put it that way.
Yeah.
Uh, Anything you want to add on the NQs before we hop over to Bitcoin?
No, I think you covered everything. Those we know exactly what the levels to watch and the levels that are going to trigger to the downside. So I think that's it.
And
Keep it
remember,
simple.
remember, this is kind of what we look for, right? You get your
Mm-hmm.
first move down, you get your counter trend that fails and gives you a lower high, and then you reverse. Because
Exactly.
this is the structure and the formation out of which fast moves come.
Mm-hmm. Absolutely.
So that's what we're looking for. We're looking to see if we can catch a fast move.
Yep. Yep.
And the setup is there so far. All right, let's take a look at Bitcoin. Bitcoin is doing something interesting. Look at this.
Yeah.
Major chop between half square and the full square
Mm-hmm.
this week. And we got a little peekaboo false break here right now,
Yeah.
right?
Not a whole lot of follow through for now.
For
What do
now,
you think?
no. I mean, it's not bigger picture, right? You zoom out, you say, okay, this is not bearish, right? Because look, support
Mm-hmm.
is way down here.
Mm-hmm.
We pulled back to that, basically a square and a half off that high. Now
Mm-hmm.
we're back up testing again. But this kind of hesitation is not super bullish.
Right. Right.
You think we would have gone up. If we would have gone up, pulled back, and then sat down on top of this, that would have been super bullish. That would have been,
Mm-hmm.
sitting on that 180 would have been really, really bullish.
Mm-hmm.
For now, this looks sloppy, choppy. Kind of want to stay out of that
Mm-hmm.
and let it play out and see. Do we stay stuck under here and start rolling over and lose this half square? then this becomes a false break, and now we're looking to see, okay, are we going to take out the lows here?
Hmm.
Let's look at the bigger picture. Bigger picture gives you, I think, a better view of it. Made the high, squared out, pulled back right onto support, the full square at the 144, took us right back up to the highs, tried to get above this half square and couldn't do it. And we're going to
Right.
close the week below the half square.
Hmm.
So weekly basis, your key numbers are 108. You want to see close over that or a close under this weekly
Hmm.
basis. Close under here, and then we're going back to the 70s. We're going to like find support here, half square, these highs potentially.
Yeah, I think today's or the Friday's low or this week's low is the key now.
Yeah.
And see if that, yeah, exactly. False
Yep.
break has any legs.
Exactly. See if that was
Hmm.
in fact a false break.
Hmm.
The monthly's kind of interesting. Look at this. You got like expanding triangle type formation here. All right. You got higher
Yeah.
highs and lower lows.
Hmm.
So January's been pretty wild range here. We made a higher high than December and a lower low than December.
Trying to find some traction.
Yep. It's a bit of indecision.
Hmm.
And anything else you want to add on Bitcoin?
No, you're on track. Looks good.
Okay. Let's go check the commodities. Today we're going to talk about corn, soybeans, and nat gas.
Hmm.
First one we'll talk about is corn. And you see, corn is just like this nice, sort of steady, smooth uptrend. But look at what we started doing this week. See this little like expanding triangle formation?
Yep, yep.
So it's getting a little choppy, which you would expect because we were talking last week, this 499 is a big level.
Hmm.
Getting above that basically puts this entire correction since July of 23 below us if we can sit on
Hmm.
top of that.
Right.
So the hesitation here is understandable. We're holding the trend line. Let it play out and know that the next big challenge is to get above 499 and then sit on top of it.
Hmm.
If we get stuck here, we could pull back to 447.
Right.
And if we do, it's still bullish, right? Because it'll
Hmm.
basically sit on structural support, give us a higher low that'll allow us to launch. We just don't know the path yet. We have to sort of see how we handle this 499 area.
Right.
Let's look at the weekly. Another up bar. I mean, we
Hmm.
basically have been 5 weeks up.
Yeah,
So it
looks
wouldn't be
perfect.
surprising, to see a pullback, 1 or 2 week pullback that maybe comes to this trend line here.
Hmm.
The big level on a weekly basis is 517. So
Right.
if we can get up and sit on that, then again, we're on top of all this whole structure here.
Hmm.
And you can see it was support over here. So it's going to be a big level. This 499 to 517 is a big level. 499 is the daily, 517 is the weekly. Let's look at the monthly. Now, monthly looks like we're going to get a close over this full square at 462.75. The thing we want to see in February's bar is can the low stay above this 462 area?
Hmm.
If we do, I mean, you look left, basically the structure that launched it the last time is all beneath us. This, 5, 6, 7 year sideways, in this half square that we saw.
Right.
And bigger picture, here was your false break low, went up, pushed up. This would give you a higher low, and theoretically we could push up into a higher high again,
Hmm.
the peak. And if you're looking at timing, the peak could be anywhere from August of 27 to January of 28. So anywhere in those 6 months, you could see a nice, bull run, sort of like we saw here for a couple years when this thing gets going. So monthly basis, February, we want to keep the low above 462. If it does, then we'll have a bar that clears the full square, which again hasn't been there since December of 23, over a year.
Right.
That was the last time we had a bar above there.
Hmm.
So it's moving. It's sort of progressing. It's building, and it's slowly doing what it needs to do to become fully bullish and kick in these bigger time frames. Anything you want to add on corn?
Corn is doing exactly as we've been talking about. We got about 395 first, and then
Hmm.
416, and ran we're running right up into that 500 area where we have the square. So I think some kind of a pullback would be nice for
Hmm.
people to get in, and the weekly could use a pullback. But corn, when it catches fire, normally you don't really get big pullbacks.
No, you don't get a lot of
So
shots.
you have to be careful in entry.
Hmm.
Looks good. Looks good. Grains
All
looking
right,
good.
let's look at the next one that's a little bit behind corn, but it's doing what it needs to do, and it's beans. Now, the
Mm.
interesting thing, last week when we spoke about beans, remember the close was right on the 1035 area, and we said, yeah, it always leaves you guessing, right? What's going to
Hmm.
happen for the week? Well, look, we spent the entire week above there.
Right.
There's
That's
Monday,
holding
Tuesday,
above.
Wednesday, Thursday. Yeah, and that is holding above. And so
Mhm.
that's if you look when you look left, you see how important that is, right? Because everything else has been except for this, couple of weeks here, we've been below this 1035 level since last August, July,
Mm.
August. So getting above that daily basis is the first key thing, and we did that this week. So now it opens up, as long as we stay above, it opens up 1125 on the upside, which is the half square here.
Mm.
So that's the next target on this. And you can see its uptrend is a little shorter because it's than corn. Corn's been grinding higher. This thing is just starting, but we're getting the formation we want, which is a high, higher low, higher high, higher low, higher high, just sort of stair stepping up.
Hmm.
Let's zoom out a little bit on the weekly. Now here we did get the close right on the line on a weekly
Hmm.
basis. This 1060 on a weekly basis is really important. And you can see, again, based upon this structure from last May, June to today, getting above 1060 and getting a full week above that, sitting on top of that, gives us the impetus to break this downtrend line, number one, and then head up to 1283 weekly basis. So it too is sort of doing what it needs to do, but you can see it's up for, let's see, 1, 2, 3, 4, 5 weeks also.
Yeah.
So a little pullback, little pause here. Not to worry,
Hmm.
it's not
Hmm.
terrible. Just it can help us build up more energy to clear this half square and then head up towards the full square.
Right.
Let's take a look at the monthly. Now, January bar is going to give us a clear of the 983 full square, which is really important. Next thing we want to do in February is attack this downtrend line and then head up to 1275. But the monthly sitting on top here is very promising. Here, if we do 45 like we've seen low to high several times in the past, it takes us out into 2028, which is interesting
Hmm.
because it corroborates with what potential for corn is in terms of highs in 28.
Hmm.
So you can see this one's a little behind corn because corn is leading. And wheat, I'm not showing wheat because wheat is still stuck in a range, even though it had a decent week and it had some days with nice movements upward. It's still kind of stuck in a range. So I'm waiting to see if we do get a pullback in the grains, which today we did, and if it continues next week, can we get a higher low and reverse? Then I'll highlight wheat along with these two, saying, okay, it looks like it's ready to go. Anything you want to add here on beans?
No, we're good. I think you covered it well.
Okay.
We have the levels. We know the direction. We know where the lows came in.
Yep.
What else?
That's it, right? You get
Hmm.
you it gives you the shot and you know where to go. Last week we talked about at this high that we were 90 up from the low
Hmm.
and that we could expect a correction. Look what we did. It's tiny, but you can see it. We did an A, B, C, D. Nice little correction, compact, came right to the trend line, and then we reversed back up. Now we pull back again onto the trend line. So we're battling here at this 401, 402 full square area.
Mm,
But it looks like the correction is over, right? We whatever little correction we needed to do off that 90, and now we're trying to build and push higher again.
hmm.
So I'm going to be interested to see next week when we get a full bar over this 416. That'll be the green light that, hey, we're heading to 460, which is the
Yep.
half square.
Hmm.
And if you need to see the ABCD, just drop down to a lower time frame and you can see it pretty clearly. I would draw it in, but it's so faint it's hard to see.
Right, right.
Let's go to the weekly. Weekly did something interesting. Yeah, if you go to the lower time frames, you see the ABCD down, but look at the low for the week, right where we needed it to be, right on the full square.
Amazing.
Yep. So we pulled back, held the full square. Now let's
Hmm.
watch, see if the high of this week, which is, what is it? Let's see, 405. When that gets taken out, we should move weekly
Hmm.
basis.
Yep.
So let's watch that closely
What a
because
great move,
again,
huh? Off the
yeah,
lows. Look at that.
yep. Fantastic. It did this to frustrate everybody, but then once we broke out and then retested that triangle, there it goes.
Hmm.
And here, this is a beautiful weekly demonstration of how you clear a level, right?
Yep.
Push up through, pull back, stay on top. So 470 is the weekly basis target. 460 would be is the daily. So we can see, that we're starting to get some targets in these mid fours on different time frames, and that's a nice thing to see come together. Gives you more confidence. On your monthly, we
Hmm.
broke out of the triangle, and now we've had, let's see how many months do we have straight up. One, two, three. This is fourth straight month up. Actually, fifth. January would be the fifth month up.
Hmm.
So when these things trend, they trend here. The half square is 488. So we got 460 half square on the daily, 470 on the weekly, and 488 on the monthly. So it's the time frames are lining up to give us a nice push from this four level into the mid to upper fours. Timing wise, if we do 90 like we did here, low to high, again, the bull market high should be somewhere in, September, October of 2027 for nat gas. That's if we do 90 low to high.
Right.
Anything you want to add on the Widowmaker?
Well, I guess you're not calling for inflation at all.
All right.
No, it looks good. I think these are, once these markets are trending, you just got to trade them. And I think we have the levels and you guys just have to trade it.
I mean, and the
I
key
think we're
things, right?
good.
We went through all the pain of this, right?
Hmm. Hmm.
Massive sideways for years,
Yeah.
like a year and a half, 2 years almost.
Yep.
And when it starts to go, man, they go.
Yeah. They go.
They just move. And this is the story of not only, nat gas, that's how a lot of these commodities move. That cotton's been going sideways for a while. I'm watching that. Oh, the
Hmm.
only other thing I want to mention, I'm not going to show the chart, but coffee broke
Hmm.
out to a new high and then pulled back right away.
Hmm.
I'm watching it to see if we fail and reverse there, that the high could be in coffee, and if that happens, I'll highlight it and show you. But we're watching that to see if it doesn't pull back, if it just kind of hangs near the high, it's okay. But if we get a sharp pullback in coffee, that may have put in a major high because it took out
Okay.
like this was all-time highs it made, and now
Mm.
it's pulled back and it's back below the previous high. So we want to watch that one. Switching to
Okay.
topics, sort of our end of show topic, Barry. I
Hmm.
was thinking about like the scenario we have in the S&P, ES, Dow, NQs, where you're getting mixed signals. How do you keep what's a practice you use to keep your mind open to the possibilities and not locked in on one thing so you could miss the clues for something else that's happening? because I think it's
Mm,
really important. A lot of, and I catch myself doing it. You get a bias, and then you only start looking for the articles or
hmm.
the points on the chart that support it, and you dismiss things that are, negating what your thesis is. Mentally, what is it that you do to avoid that mind trap of, well, I believe this is going to happen, so I'm only going to pay attention to information that supports this.
Right. Well, I mean, in my case, I'm a little bit on the lazy side. So so I
Right.
look, that. So I look for ways that take the minimum effort in a way.
Hmm.
And in that sense, once we see, I mean, what we map out are we map out the squares and how price and time is balancing. I mean, this is the approach we take. And then we're just trying to map out the one leg at a time, let's just say,
Hmm.
or one square at a time, or one phase at a time, or cycle at a time. So in doing that, most of the time you're in one of these situations where, well, is it this way or the other way? So then last week we talked about probabilities and how we weigh that in.
Hmm.
But the way I keep my mind from getting into this is going to happen over the other is I really try to keep my mental chatter and its impressions separate from what's really happening and how I interpret that. So I'm going to give a little view of like what's on the screen versus what's on the mind of the screen.
Well, can I give an example, and
Yeah.
just so people can understand. So the
Hmm.
mental chatter would be like, oh, if I bought it at 5,000 and sold it at 6,000 because I think it's bullish, I'm going to make so much money. Is that the mental chatter, an example of the mental chatter you're
Well,
talking
that's
about?
that's one type of, I mean, there's so much of it, right? So that's one
Hmm.
type. Another type is, obviously then there's a fear of missing out. Then there's a fear of not losing what you already have. I mean, there's no end to the mental chatter because depending on which phase of the market you're in, the chatter changes, right? If
Right.
you're waiting for a move, then it's like, oh my God, am I going to miss it? Should I be in now? Should I be in earlier or later? So mental chatter is just, I would look at it as something independent of what's on the chart. It's just because the chart doesn't have an opinion. Chart is just a chart, and the chatter is,
Information.
yeah,
Right.
yeah, exactly. Information to be decoded, right? So because
Hmm.
10 people can look at the charts and come up with different conclusions.
50
So
different things.
yeah, yeah. Which is, I mean, it's great because we want to see how other people see the markets because we can get trapped into that one vision, right? One view.
Hmm. Hmm.
So there are way I see it, there are two things the mind screen where, you play out your scenarios and the chatter and everything else. And then there's the actual prices that are plotting across time. And you have to look at that and, um, and you have to reach some conclusion. So the way I look at it is, yeah, let's say on the topical, you have the squares and the price action and all of these things that we talk about, we look at and we post about. Then let's just say on the internal, what I'm really looking for is one trigger to the next for an entry point. Really looking for entry points. It's not about what the market's doing. So what I'm really doing is anticipating entry points, and then when I see one getting set up, then I really pay attention to see, okay, is this going to happen or not? So a good example of that is this week's, we talked about the SPX, and well, we have a potential for a false break. Doesn't mean we have a false break and oh my God, everybody should be short as of the close today, which is a little bit
Hmm.
too late now anyway.
Right.
um, well, that's not the case. We know the potential is there, so we're watching that low. Next week, I'll be watching that low very very closely, and then looking for some kind of a way to sneak in there once it flips, the trigger flips. And I think that when I say sneak in, I'm talking about where to get positioned with minimal risk. And once that happens, then we're not looking for entries anymore. Then we're managing that trade and perhaps looking to add to that. So it takes a whole nother scenario, right? So the chatter changes at that point, depending on the phase we're in. Forget the market. Market's another phase, I mean, I think this is what makes trading so complex. I mean, first of all, you have the market doing it, and then we get into our own phases. Once we enter something, then we have to
Hmm.
manage it, then we have to exit that. and then we have to see if there's anything left, or should we be trying to re-enter? It's the never-ending story. So I think because of that, I tend to go from one potential signal to the next. So then
So
I
so to
limit
jump
my
in,
exposure, right, to the information.
right.
Go
So
ahead.
to jump in and summarize it, you're focusing on not on the prediction or the conclusion, but you're focusing on the level which triggers you into action.
Absolutely. And what you're talking about, the research and the analysis about the prediction, the forecasting part is secondary, right? So once
Hmm.
I'm close, like let's say I'm one bar away from some kind of an entry, or
Hmm.
you take those fuse patterns, the fuse levels have been killer this week. Well, they're
Right.
killer every week, but except especially killer this week because of all the runs we had overnight and whatnot. But once the line is in place, I'm waiting to see, okay, where's the pattern, first pattern that's going to emerge out of that.
Hmm.
And so I'm not looking at anything else. I'm just really hyper focused on, okay, which pattern is emerging out of this, interaction between price and fuse line. So
Hmm.
the same way, I mean, that's the easy one because we get a couple of them a day, right? So
Sure.
it's a good example. A longer term example would be the cash where we have a potential for some kind of a false break. So we watch to see what happens. Now, while that potential is sort of flashing, now you do the analysis. Okay, what's probable? I mean, same thing I do with the fuse lines. Once the pattern looks to be emerging, I mean, you still have time. It's not like as soon as you see it, you have to act. With fuse lines, those patterns, you have a couple of three, I mean, maybe even half an hour to set up your trade, because
Hmm.
it's developed slowly. So then you look at to see, okay, what are the possible scenarios? How is it going to unfold? That's where I kind of jump into like, okay, show me if this trigger fires and I'm in a long position, what does that look like? Where is the resistance? What's the pattern look like? What are the levels I got to watch? So that way I'm always, I would say, keep the mind like work oriented instead of fantasy oriented,
Hmm.
you keep it busy with actual work. And I don't know. I guess it's not something I thought of doing. It's just kind of how it ended up. So I hope
But
that
it's
helps.
super important. No, I think it's very helpful. And like I said, these are the type of topics I want to bring up and talk about because I
Mm,
do think it helps both veteran traders and newer traders and everybody in between because we all
mm,
have that mental battle that you're someone said I think you're not trading against the market, you're trading against yourself, and you have to figure out, how you where you're susceptible to fail and how you prevent those things from happening. The mental, what you talk about, the mental work versus the chart work.
mhm.
They're both super important. Go
Yeah, I was
ahead.
going to say for independent traders, it's really important. I mean, if you're just following a newsletter or some other service and you're doing exactly just duplicating trades, fine. You don't have a whole lot to think about. You just follow sort of the recipe, right?
Yep.
But if you're independent traders, man, it's a lot more work. You have to be disciplined. You have to have your mental stuff straight up. You get to have your ducks in a row when it comes to the charts, and everything has to be lined up. But I think more than money, I think the pleasure there of having that discipline is kind of nice.
Right. To
You
follow
know?
to follow your system. That's the key.
Yeah, exactly, exactly.
Well, listen,
Good.
everybody, as Barry said, January's been a little funky, but we're still committed to getting the content out to you. We appreciate, you sharing the links, subscribing, hitting the like button, and helping us grow the channel again this year. And I would say rest up again this weekend because with the FOMC next week and end of month stuff, it should be a wild week. Good job, Barry, and we'll talk to you all next week.
Great job, Ben. Thank you, and we'll talk to you next week. And everybody,
All
rest
right.
up. Bye bye.
See ya.
Bye.